Hey everybody, good morning, good afternoon, good evening. Karl Samsen here with Johannes Gugl. Very, very interesting fund of funds management company based out of the UK, Aaro Capital. Johannes is a partner. I myself am currently in Los Angeles. I am on the fund tour of SGI Securities based out of New York. So if anybody is in the area, feel free to give me a shout or ping me offline, and we should definitely connect. But Johannes, this is you and me. We're live to the viewers of GDA Europe. Let's give them a good show. How you doing today?
Hey, good. How you doing, Karl? Thanks for having me.
Doing very well. You're very welcome. Now we might have a few guests that join us along the way, but for the time being, let's talk about digital assets. Let's talk about funds. Let's talk about strategies, managers, right? If you wouldn't mind, just give the audience maybe a 30-second, kind of background on who you are, how you got into space, what you're doing, with the fund-to-fund model at Aaro, and then we can kind of dive deeper into more specifics on the operations.
Sure, happy to do so. So yeah, my background is I'm like more than 20 years now in the business. So started in the software industry, like in the middle of the, like we call it, the new economy hype also. So I ran through all this hype cycle already 20 years ago, what happened also now in the blockchain space. So then I moved further into management consulting, M&A consultings for the likes like KPMG, PwC, worked globally, a lot of interesting projects. Then in 2011, I moved out with my management of the KPMG advisory team in Zurich. We founded a private equity fund where we invested in a couple of industry companies, restructured them, merged them, sold them in the market then. But then I left like in 2015 then to do my own venture business, investing, venture building, and exciting times because I was more like into this like startup, a passion in it. And then joined the family office in 2017 in Zurich, which mainly concentrated also in startup venture investments. So took over a portfolio of ventures there and worked on that, restructured. And yeah, I mean, like in that time also came in like that we were thinking about like, okay, what is the future really investing in the venture space? And I discovered Bitcoin already like 2011, 12, something around that, but saw it more like as a kind of like prototyping for future digital money, but not really as a valid alternative currency. So really didn't really follow that so much until really the Ethereum white paper came out like in 2015, 16, and dived into that. And with my background in management consulting, I saw a lot of industries and saw especially like where the lacks are in the different industries, and saw immediately like how many use cases you can really cover with that and how much improvements you really can get in with this technology. Even developed, like factoring solution on blockchain base. Was even surprised when I looked at that, what I wrote already in 2016 about that. But basically then dived in 2017 with my team at the family office. We also started Blocksmeta as a kind of like company, like advising also companies, but also investors. And then I met my partners on a family office event in Germany, where I was presenting about crypto assets, crypto investments, and long story short, we then moved together. So I joined Aaro Capital in 2019, end of 2019. Before we launched, so we prepared the fund, made like everything set up. So we're really a regulated fund, so really a professional setup, so you really have to work into that. So I also have experience a lot like in regulations, worked a lot in like financial services and everything like that also during my consulting time. And then in 2000, like last year in June, we launched our fund of funds. And since then we have invested in total like 11 different strategies. Managers have discovered the space, and was an exciting time until now already.
That's awesome. You mentioned the difference in experience you had reading the Bitcoin white paper versus the Ethereum white paper. That's an experience I actually was smiling about because I had the same kind of moment myself. Granted, I read more of the Ethereum white paper than I did the Bitcoin white paper, but Look, you speak to a lot of managers, right? You're pretty active when it comes to, sourcing different funds and figuring out what's interesting in the space, how people are running their own shops and,
Right.
managing the assets of your LPs and your clients, right? Which as a fiduciary, is kind of the most important thing to make sure that, A, their money is safe hands, but B, these people are progressive and they're going to return, what is expected from the space. So given that you have, all this exposure and you speak to, all these managers on a quarterly basis, what do they find is kind of the most exciting currently, either as a trend or as a, new wave of adoption? And what is, or where do they see the future of this space?
Yeah, I think it's not as a fund of fund. You basically not so much looking at the trends. The trends are coming up, but the trends have to develop. So as a fund of fund, it's important that you really have like a diversification over the different strategies. So we're really looking to get like the whole spectrum from really the fundamental VC over the trend following funds, the arbitrage funds, up like to really mining, etc. But what we see a lot is like really that managers coming from the traditional space, from the fund space, developing their own algorithm or took them with them already, and really applying that to the crypto space because they can make more use of it in more inefficient market, which is volatile, etc. So that's pretty interesting, like also using those tools which are pretty unique in the crypto industry, like the perpetual swaps, and against the spot market. So that's quite interesting. And what we see now more and more coming up is that like the DeFi space becomes more covered. And like DeFi space as such is pretty young. So also like the managers had to develop also their strategies. But we see that now more and more coming up, leveraging really like the kind of like yield farming, but also more really sophisticated funds and technologies diving into the DeFi space. But this is really like the space which is currently more and more evolving, I would say. Like those are the funds which are currently coming up, which we're currently start to look at, basically.
Got it. When speaking to managers, what do you think the most important question that they need to answer, is off the bat?
I think for investors like us, is really the risk management and the risk protection, downside protection. I think that's very important. Like we're dealing with a very volatile field, and we want to really have an investment product in the hand, which is also attractive really for the institutional investors, which are worrying a lot about like the volatility, about like the downside risk and everything like that. Like we're a liquid fund, so that's also something which comes down that is like not like a venture phase where you're growing your portfolio and then at one time you get the exit. And I think that's something what we have to look a lot. And secondly, it's really the operational setup, because when something goes wrong, it's often like based on operations, so not so much about like the investment can go down like 20-30%, but if something really happens, then it can get bad, like we had just like a half a year ago or like last year when one hedge fund was like a fraud case also, like that's the thing. And we're looking really on the operational setup in terms of like that the governance is in place, that the risk management is really properly set up, that all policies are in place, yeah. Like that's really like where we see it equally weighted in terms of like the investment due diligence and the operational due diligence, which we're covering there.
Yeah, a good friend of mine once said that the liquidity is the lifeblood of any organization. And from a perspective of protecting your downside, which in an industry that, can be up 5,000%, down 50%, in a 24-hour period, obviously very important. Now, we just went through a very, very key, unfortunate, but eye-opening event, right? This last year, in which, all financial markets in March, basically took a massive hit, right? There was significant panic on the streets, in the ether, whatever you want to call it, depending upon the market. Now, in a time like that, when you guys essentially oversee, multiple millions, if not billions of dollars, and are distributing that wealth between a select group of managers. What is the business practice at that period of time? Are you guys, individually having conversations with every single manager? Do you guys have a team session where everybody is just on one call, and you have people saying, guys, just let's stay calm? Or how did you handle that? I think that's probably the most interesting thing that we can talk about, because again, it's impacted everyone's lives from both financial perspective, personal perspective, and it's something we share.
I mean, like, first of all, as I said, like, as a fund of fund, it's important that you have like enough like diversification, and even like to have funds which we also have, like who are like performing like against the cycle, like who really can participate in like the downside, like we even saw funds which made really their best performance like in March last year, for example, or funds also who are making now currently really good performance, so what you need to do is really to balance in a way that you're not so much exposed really to such heavy market drawdowns, so that's really important. So, and that starts really also with our allocation process. So basically, we're always looking to have a good balance in our portfolio, which means then also that we're looking at, okay, what we have our monthly manager strategy meetings where we're discussing all like the on-chain data, the off-chain data, the macro data, and everything like that. Like really discussing heavily, a couple of hours around all of that, so well prepared before. And then we basically also decide like, what we do, and like in terms of rebalancing, to which funds we allocate a little bit more, to which funds we have to redeem a little bit more. Also, like when funds before invest really performed really well, so we have to also rebalance, withdraw, and that we're not exposed too much then to that market risk, And I think that's really the main thing as a fund or as a crypto fund of fund manager, that you're managing your risk and you're managing really your portfolio.
I think the rebalancing aspect of a fund of funds model is actually quite interesting, especially now that you mention it, right? When you have a specific fund that could be up 500% in a year, right, and another fund that's up we'll call it 60% a year, and maybe one's lagging at 20% a year. I mean, these are all solid returns. In typical equities, you'd be a multi-billion-dollar rock star on Park Avenue, right? But in this space, it's kind of like it's normal, right? So what do you do in situations like that when you have a significant performer? Are you guys trimming? Are you rebalancing towards diversification and something that might give you either a hedge against a potential downside? Like what is the thought process there?
I mean, like, that's right. I mean, like, we are forced to reduce our exposure to them, because otherwise they have too much weight, and as I said, like, we have too much exposure then to that specific market risk. So that's a constant thing, like we even had funds like which performed more than 500%, so we had to rebalance. We constantly have to rebalance, really withdraw. So that's our main work, what we have to do, so to keep that fund in a balance, it can be, or it happens, that those funds or those strategy buckets, which is especially like in the VC fundamental space, that they're getting an overweight, and I mean, like, then if you're not even like able to raise that much fund on the other side, like from investor, for example, like then you definitely have to rebalance, and we're working also by ourselves, like with derivatives also, to reduce our market exposure, so that's basically the job of my colleagues, like who are doing like more like our CIO and the team, and which take place. But as I mentioned before, it's really a huge team discussion. So we have an advisory board, for example, which coming really from the traditional hedge fund space. So Peter Rick, for example, he's the former global CEO HSBC Alternative Investments, and also like managed their hedge fund portfolios. And also like our chairman Stuart McDonald is a hedge fund veteran, so we have that experience also like from really the traditional fund managers, hedge fund managers, who can also bring us some inputs,
Understood. Well, I mean, look, you guys obviously have it pretty figured out. There are a couple hundred participants on this call, tuning in internationally, some of which are in your target areas. Obviously, this is a digital asset forum, so we're all of the same space. Is there anything, that you want to just quickly discuss while we have, another 5-10 minutes here, that, might be informative in regards to, your activities, your fund, and or ask me some sort of questions about, what I'm seeing in the US, feel free.
Yeah, I mean, like maybe what I wanted to talk a little bit more is about like really the trends, what we're seeing, like I think because we touched that at the beginning, as a fund of funds, we are less so much jumping really immediately on the immediate trend, but we are looking at all those trends, because we see a lot of developing in the last year, especially like in the DeFi space, and we think that there will come up much more, in terms of like further leveraging like the DeFi space in terms of like uncollateralized loans, also like mortgage leasing. I think we will get there. Also like the decentralized derivatives structured products space. I think we will see much more to come. And especially like I think decentralized insurance, like those are interesting topics which are developing. Decentralized computing, like everything around like industrial staking, for example. I think that's also very interesting. Supply chain management, industrial staking, for example, like a Fetch AI or something like that.
There we go. Okay, that's where I'm at. I love industrial data. AI paired with industrial data is actually one of my favorite topics. It's funny you mentioned Fetch. We've been invested and partnered with Fetch. I love
Cool.
Hamine. I think he's a fantastic CEO and founder.
Yeah.
But outside of that, just to rattle off a few kind of names that I think are relevant outside of Fetch. I think that Filecoin is a juggernaut that has kind of yet to see its full potential be utilized. I think that's a huge real estate play. Now that China has been diversifying away from Bitcoin mining on the mainland, I think that because their biggest issues are actually data storage, that Filecoin will be a significant part of a Chinese infrastructure. Whether it's fully supported by the government verbally and publicly, or if it's just being used kind of a little more, we'll call it off land, but supporting the mainland, we will see. But bottom line is, everywhere else, it's a huge real estate grab. And Filecoin is I would say the new obsession. Another big player that I like is, not the size of Filecoin and not yet the size of Fetch, but Constellation Network is fantastic. Those guys are doing amazing things when it comes to security of industrial data. They're building their client lists. They're working with mostly kind of government and kind of sticky kind of relationships that typically have created the highest threshold for security and privacy. And also, again, when you're a government agency, you're dealing with the most amount of data. So, that's we have significant allocations pretty much across the wave there. I'm very, very bullish on the use of decentralized technology and blockchain paired with AI on data. I think it's exciting, and that in my opinion will take us through the next, we'll call it 10 years, and I think we'll start to see it pick up in the next 3-ish, maybe even earlier.
Like we're still like on a starting point, like I think we're both in for a couple of years now, and I'm saying that since many years. But when we see like now also the magnitude of developments, and especially what is being invested in the space, like that's like tremendous, and like we see like really billions and billions coming in, and that's what we see is that those funds, for example, we are invested in are raising like tremendously more money in the next funds, like they're heavily oversubscribed also, because I think a lot of people are seeing that potential, like what we have there in the market and what will come up and what is developed. developing, and I think also with all those like layer ones and that full pockets what they have and all the venture capitalists and everything like that, like we will see a lot of funding of exciting projects, and which is also great for us, because we see then that those managers who have the experience, who have really a track record and everything like that, really become better. Like for example, those funds have to register with the SEC now, also fulfill more requirements, also like, which is also what we like to see, but that more professionalization comes into this whole space, But getting back to your points, I think like those innovations that will keep on, for the next couple of years, and I'm often like wondering, like in 2017, 18, I dived into a lot of like use cases, ICO use cases, which disappeared, which might have been fraud, everything like that. But what was exciting at that time also is like the ideas which came in, especially like really connecting the traditional world with the new world of crypto, and I think even like a lot of those concept from that time, like will be recycled, and we saw that already around like 2000, like when companies were early in the space, didn't really get traction, and then like 1-2 years later, others like were successful with the same model, kind of, so we will see a lot around that, and I think we will see a lot around venture capitalists and investors really diving into that.
Well, we've touched on a lot, and granted, we unfortunately were not joined by our other guests, but it's equally as special when you can kind of just dive deeper into one specific area of a conversation with somebody who, again, has been around the block when it comes to managing of assets and again distributing wealth, and again acting as a guardian and navigator for those that are less familiar with the space, but again are equally as curious as we were once, many years ago. So I mean, Johannes, we've about 2 to 3 minutes left here. If there's anything else you want to kind of just chat about real quick, if not, I can kind of just get us wrapped up here. And anybody has any questions or comments, I'm sure that Johannes is able to post his personal information. If anybody wants to reach out as an LP, or anybody in this call is potentially a manager, I know that both are always of interest in a scaling business model for funds of funds.
Sure. So yeah, I mean, like, what can I say more? I think what we really have a need in the industry is really education. I think like we are in such a knowledge intense space, and I think that also relates to the investors. Like we're talking a lot like with institutional investors, and we see that there is still a lack of understanding. Like, okay, what is Bitcoin, what is blockchain, and what is the potential? And I think like such events also like yours and more other conferences should also target more like really those who are not in the space, like not the crypto natives, and I think that education must go on, that the whole industry really can fully prosper. I think that's something what I just wanted to end with, I would say.
Wise words, very wise words. Well, Johannes, it's my pleasure. Thank you for joining us today. Enjoy the rest of your week, and I'll probably be in touch with you offline so we can discuss potential integrations for funds, managers, and LPs. So thank you again, and enjoy the rest of your day.
Thanks. You too. Thanks for having me. Cheers. Bye-bye, guys.